What's better, an SBA 7A or SBA 504? Why you use each product? SBA is a very, very powerful tool for an owner user type of business where you can get the real estate, you can buy the real estate, you can finance working capital, you can finance equipment through these loans. So it's extremely good priced, low cost debt. Lots of uses. Be happy to discuss any of this with you. Always feel free to book a call on my calendar link below or to the side or wherever it is. Please share this and like this in YouTube, preferably, but you can also listen on iTunes, Stitcher, and all that.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Beau Eckstein.
Hello, and welcome to another episode of the Investor Financing Podcast, and I'm your host, Beau Eckstein, and today we're going to talk about what's better, an SBA 7A or SBA 504, why you use each product, and also you can use these loan products together. SBA is a very, very powerful tool for an owner user type of business where you can get the real estate, you can buy the real estate, you can finance working capital, you can finance equipment through these loans. And I kind of want to do this video because I get calls and everybody wants to know, I want to do an SBA loan, but they don't know, is a 7A makes more sense or of a 504? So if it's real estate type of transaction where you're going to occupy 51% or more of the space, SBA 504 is a first and a second piece. Okay. So it's a conventional bank loan. And then the second is, so it's 50% loan to value on the first and 40% piece is the SBA piece, which is a second piece, second loan. And so you're going to have two different rates and two different programs. The SBA 504 piece is in the twos, and on real estate, it's amortized of up to 25 years, and it's fixed for that 25 years. So it's extremely good priced, low cost debt. The first piece, it varies. Some lenders are variable on the first piece. Some have fixed rate terms. Usually it's a 5 or 6 year fixed if it's going to be fixed. Some of the banks are floating. So what we do when we first talk to a customer or client is we got to assess, okay, what are you doing? Are you buying a franchise? Are you buying anything real estate related? What's the sources and uses of the capital you're requesting? You should have a breakdown of this. I actually have a little PDF with links to all the forms you're going to need on either an SBA 504 or 7A. Comment below, and I will be happy to send that to you, and that will kind of assess.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
And now a word from our sponsors. Want to save money on your taxes? Cost segregation is a strategic tax planning concept that saves money by deferring federal and state taxes through accelerated depreciation. Get a free benefit analysis today. Please visit costseghub.com for more information on cost segregation and all of our cost recovery services that can put more cash flow in your pocket.
In the beginning process is you need a business plan. I have a template for that. You need a PFS, which is Form 413, which is a SBA personal financial statement. You need that completed. If it's an existing business, we're going to need 3 years business tax returns, 3 years personal tax returns. If it's a startup, it's different requirements because we have to do a projection-based loan, right? So it's different than buying an existing business that's got cash flow track record. Obviously, startups, we're a little bit more conservative on the loan proceeds you're going to get. You might have to come in with 20%, maybe 10%, but realistically, you're going to come in with more than 10%. When you're also, one thing to note too is when you're applying for these too, that they are always going to look to collateralize your primary residence or real estate holdings that you have. There are some workarounds and some different caveats to that. Just be aware of that. But the 504, I would say for long-term debt, the cost of funds is way less than a 7A, but 7A is valuable as well because you can do real estate and working capital at the same time. If it's a non-real estate related loan request, then 7A is usually the option to go with. There's also, if it's in a rural community, there's also the USDA that does BNI loans, which I can talk to you about in another episode. You can actually go through and look for that episode that we talked about, USDA loans. That's for more rural populations with a population of typically 50,000 or less, but that's also a very good tool for, special use type properties that you would never think could get funded, but there's a way to fund everything, right? So whatever your request is, there's a way to get it done. There's all these different loan programs, there's grants, there's government funding. Obviously, we've talked about CPACE in different, the 25 states that allow for CPACE for industrial properties for development. You can put that in the capital stack. PACE doesn't work with 7As as well. It can potentially work with a 504. The 504 also has a green program too when you're putting energy efficiencies into green energy properties. So there's some benefits to doing that, and we could talk about all that and more. But the 7A is really good for they have loans 50,000 and greater, which are called express loans. I think they go up to what do they go up to? 150,000. I forgot what the minimum was. Then you have the traditional 7As, which can go up to 5 million on the 7A piece. The 7A can actually work in conjunction, what we call pari passu, with a senior lender. So you can actually do $8 and $12 million combined loans with 7A. With SBA, you can do $30 and $40 million transactions. However, the SBA piece is capped at 5 million. I think you can go 5.5 if it's a green project. And you can do construction. So on the 504, the way it works is there's a first deed of first lien, and then there's a construction loan second, which will be once you get certificate of occupancy, that actually gets purchased by the SBA essentially. So there's actually an interim loan, and then once there's certificate of occupancy, that loan does get purchased. But there's specialty lenders that just do the construction piece for the interim. There's also banks that do the whole thing and then sell off that piece after they get certificate of occupancy. This might be going over your head, but I just want to give you some feedback. 504s are great for self-storage that you're going to be operating. That could be a ground-up acquisition, senior living projects, assisted living ground-up projects, acquisition of an existing property with TI and CapEx in that budget, where you can buy a building that's maybe vacant, and then you can do all your TIs and get all your working funds all incorporated within this SBA piece. In addition to that, you can take down a property with an SBA 504 as long as it's owner user, and then you can also partner with an SBA 7A to get working capital and finance equipment and things like that. So there's all these ways of structuring these deals, and it really starts with the business plan, personal financial statement, and sponsors that have relatively good credit. There's anybody that's on the loan application that has 20% or more interest in that entity that's purchasing the business or property needs to go on the loan application. And the intention is that it needs to be an owner user type business or building. So anyways, hope that helps. And that's kind of the rundown of the SBA 504 and the SBA 7A. Lots of uses. Be happy to discuss any of this with you. Always feel free to book a call on my calendar link below or to the side or wherever it is. Please share this and like this in YouTube preferably, but you can also listen on iTunes, Stitcher, and all that good stuff. Anyways, thanks for watching and listening, and we'll see you on the next episode.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.